Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 10th or the 11th of October 2020. Now, I've been receiving a lot of emails, a lot of messages asking what's going on with the market, what can we expect over the coming weeks in the lead up to the election. Now, before I dive into my charts and share my screen with you, I think the one thing that I would like to impart on everybody, if you didn't know already, is the answer to what is going to happen in the lead up to the election is nobody knows. That's the default answer for any good analyst. Absolutely nobody knows because the market is much smarter than everyone. Now, to the other side of that, what I will be doing is walking through, I think, around 20 individual stocks that I feel like should be on the radar over the next week or two. I will be given around 5 minutes of overall market analysis and commentary, as I always do. And if you get some insight from this, if you enjoy the analysis, please do give it a thumbs up, give it a like, subscribe, all the good stuff. It lets me know that you enjoy it and I can keep producing a bit more content. But rather than ramble on, let's dive into the charts. Let's see what the market's telling us, and let's see where we can look to allocate in the coming weeks. Now, before I get into the charts, please do pause the video, make sure you're comfortable with that before watching any further. Just basically says do your own due diligence and don't act upon anything I say. Now, most of you again will know this, that I'm registered with the CMT Association, working my way through my exams, etc. Technical analysis is something that I'm widely known for. I have a code of ethics, and that's very, very important for my line of work. Now, if you do get some value from this, please do subscribe to the channel, give it a thumbs up, let me know what you think in the comments. Now, before I get into the analysis, 2 weeks ago I provided a free social media analysis to my followers, and this was the performance of the charts provided. Now, what I would say is I have a philosophy that's built upon finding strength within the market. I'm not looking to buy beaten up names and hoping that they rebound. I firmly believe that when stocks trend, they tend to trend much further and higher than many think is possible. So if you're a day trader, this analysis is probably not going to be for you. My time horizon for my trades, my positions, etc., the analysis that I provide my clients is really mid-term, weeks to months. So if you're out there and you can't figure out why you keep getting stopped out of trade after trade because you've got a little 20-cent stop loss, again, that's not the game that I'm playing here. I like the mid-term approach. Now, where is the strength at the moment? Now, as I said a minute ago, I'm going to just spend a couple of minutes walking you through the overall market before I get into the individual names, because I think it helps to give a collective overview of what is actually going on with the market. Now, this is what is called a relative rotation graph. Now, what it helps me to do for my process is to identify what areas are looking to move into this leading area of the market. Now, the theory with rotation graph is that these areas go around in circles. So we have here, we've got financials are starting to move into the improving sector. We have the small caps, the Russell 2000 is now starting to move into the leading areas. But what has my attention, and I think probably has most people's attention, is the move, the relative strength in technology over the last week. So the Sky ETF is one of the components. We've got semiconductors, again, is starting to move. And I think biotech is potentially setting up here as well. Now, when we look at the overall market, what we want to do is, yes, we all understand the key levels in the market, but what generally sets professional analysts such as myself apart from a lot of the day trading gurus that you might be following, etc., is looking at the internals of the market. Now, what I like to do is look at what is called market breadth. Now, the breadth of the market, this is the S&P 500. The percentage of stocks trading above their 200 period simple moving average is now starting to move higher here. Now this is a big thing for me, because when we look at the decline that we've had here, we can clearly see that the percentage of stocks that are within the S&P 500 is actually starting to improve, and is actually higher now than what it was when we met this pivot high here from the 2nd of September. So that for me tells me that I have a lot more confidence in the market moving forward. Now, a couple of weeks ago, I highlighted the correlation with the S&P 500 and the US dollar index. Now, this is what is called an inverse correlation. And as we can see here, as the US dollar has started to move lower, we've got the overall market starting to rise higher. So for me, the US dollar is a very, very important chart at the moment. If we were to see any kind of massive rally in the US dollar, that would be a problem for the S&P 500. Now again, not many analysts floating around on YouTube, etc. will be picking up on things like this, but it's very, very important. You should be keeping an eye on the US dollar index. In my opinion, it's driving the behavior of the overall market at the moment. Now that leads me on to technology and the areas of strength. For me, at the moment, I'm viewing the triple Qs as forming a bit of a base pattern here. Now, what we tend to find with a base, uptrend, consolidation, breakout, that is typically what we see when we start to develop these bases. Now, I do have a few examples of it on individual names this week, but when we look at the overall market, again, the strength in the market is there. Over the course of the last week, we've seen incredible strength in semiconductors. I'm not too interested in the weed sectors, etc. Those are very, very difficult to get any kind of handle on any consistency on. But certainly the biotechs had a massive week. Semiconductors, retail is now starting to break out. So one of the charts that I wanted to provide this week is the growth versus value chart. Now, Goldman Sachs 10 days ago were calling for a move into value stocks. Now, the value stocks, in my opinion, are a lot of, we might call them dinosaurs. They're slow, steady, they don't really do a whole lot, and typically investors will move into them for the dividends. Now, growth stocks are your typical high momentum names, generally within tech, biotech, etc. And what this chart is telling us is growth is outperforming value, and it is only just broken out above the highs from 2000. So what that tells me is that I do not want to be touching value names. I want to be staying within growth names, because growth names are outperforming value. It makes no sense for my process to be in these old dinosaurs. So that's my view on growth versus value. We have earnings coming up this week. We've got the financials, and the question that I'm asking at the moment, the XLF is the logical ETF to look at here, some notable holdings. At the moment, the relative strength of financials is actually below the financial crisis lows. Now, that's clearly a problem if you're holding a lot of these names. Yes, some of the individual names might be holding up pretty well, but again, going back to the chart, where do you want to be invested, growth versus value? You could be holding these financial names, but the rest of the market is moving higher and faster than a lot of these names. So it makes no sense for me at the moment to be invested in financials. But when we look left on the chart, we can see patterns of behavior that can help us to anticipate possibilities for future performance. Now, we can see here positive momentum divergence that produced a rally. And the question that I'm asking at the moment is, are we seeing the same thing again? We know that with failed breakdowns, we have fast and aggressive moves in the opposite direction. So next week, financials might well start to outperform the broader market. So that is an area that I will be keeping a close eye on. One of two things is going to happen. We're going to continue to steadily decline here and financials just don't get going, or financials are going to put in a failed breakdown and rip higher. So financials, I think, makes a lot of sense. And when we look at European banks, don't even get me started. They're in a 27-year downtrend. Yes, they've put in little rallies here and there, but if you've been invested in European banks, the market has passed you by for 27 years. So again, I'm not looking to buy these types of beaten down names because the weak tend to get weaker, whereas the strength tends to get stronger. And again, that's my philosophy and my process. Now, something that else caught my eye this week, volatility is now starting to drop off. Again, going back to the chart with the inverse correlation between the S&P 500 and the dollar index, there's a similar correlation, and when the VIX is dropping, we tend to find the S&P 500 and the broader market is rising. So I'm a lot more bullish on the market. Hopefully those charts have provided some kind of insight into how we view things. But now I'm going to get into the individual names. Now, one thing that I want to say is if there's any disclosures that I need to make about my own personal positions or any positions that I've recommended to clients over the last 10 days, then I will communicate that as per my code of ethics. Now, one of those names is Plug Power. Plug Power was a recommendation on this breakout here. It has started to move, but one of the reasons why I wanted to communicate it this week is we have now broken out above a Fibonacci extension level. So I would like to see a little period of consolidation here. Now, something else for those of you that have got Thinkorswim in the US, something that one of my clients communicated this week is there is a communication on the Thinkorswim platform that there's a potential reverse split coming in Plug Power. So that's something that you should keep an eye on for those of you that are holding. Datadog, I think we've had a breakout and it looks like a bullish flag pattern. So again, this is not a bearish development for Datadog, and I think it's a stock that you might want to start doing a little bit of due diligence on. Now, it's not just breakouts in price that we look for, we're also looking for breakouts on a relative basis. Now, this is a relative comparison to the S&P 500. So again, when we get these breakouts, what it tells us is that Amazon has the potential here to start outperforming the broader market. Again, if you want to drive out performance on your portfolio, you want to be identifying the relative strength within the market. And certainly Amazon, we have an upper price target here of 4,500 at honeystocks.com, and I would fully expect Amazon to get there, provided the market doesn't have any massive tantrums. Now, Cldx, again, another disclosure. I have a couple of personal positions in this stock. It's another stock that was recommended on this breakout here. It's performing very, very well. I am looking to personally add more position size to this on a breakout above $20. I've applied a trailing stop loss and we'll see what happens here. But certainly Cldx, I think, looks very, very interesting on many, many levels. We've got Nuance Communications. Again, I think we're very, very close to breaking out. Again, this is another disclosure. This was a recommendation around a month ago, and it's moved, I think, 10 or 11%. The trend, we like stocks that are going from the lower left to the upper right. So again, I think Nuance Communications. Microsoft, I think there's about 8.5% potential upside here. Yes, it got beaten down with the technology correction that we've seen recently, but again, as the triple Qs are starting to rally, Microsoft obviously has to go with it, given the weighting that we have with Microsoft in the triple Qs. Apple, I have a position in Apple, another disclosure. And again, we have an event coming up this week, which I think will obviously, move the market a little bit. We'll see what happens, but this is one of those stocks that I'm very, very happy holding. Even if it declines, etc. It's part of my longer term portfolio. I'm quite happy to do things like dollar cost average on it, etc. But certainly it looks like we're holding above the 50 period simple moving average. I've added in a little bit of a trend line. Seems to make a little bit of sense to me, but we're also above the AVWAP from its recent highs. So again, the expectation is that if the broader market is going to continue moving higher, Apple, you would think, would have to go with it. Snapchat IPO price, I think we're looking above $30, and I think Snapchat gets very, very interesting very, very quickly. As a 38-year-old man, I have no use whatsoever for the platform, but I believe the kids enjoy it. Above $30, and I'll certainly enjoy the stock. Nvta, again, another disclosure. I have positions running on this stock. It's a recommendation for our clients, and we've had a breakout. It's moving very, very well. We've now moved above the $50 significant round number hurdle. Again, I've applied a trailing stop here, but ultimately I would hope to see this move to 60, 61, and hopefully beyond. We have Netflix, very, very close to a breakout. Again, we're not overcomplicating it here. Uptrend, base, hopefully a breakout. Peloton, again, another disclosure. I have position in this. Again, it's been a recommendation to our clients. Breakout above $100. We're up at $123. It's up 23% in the space of 10 days. Beautiful trade. I think everybody's super happy with it. But we do have an upper price target here of 150 and beyond. AMD. AMD is in a bit of a holding pattern at the moment. There's certainly, I think there's been a reaction to the news, I think, with XLNX this week. I think there's a buyout. I think one of my clients was mentioning. Again, I don't really tend to pay too much attention to the fundamental side of it. I'm very technical in my approach, as I'm sure most of you can probably tell. But certainly, we get a breakout here. I think AMD again gets very, very interesting very, very quickly. Beyond Meat is broken out again, uptrend, base. We do have an upper price target here of 240, and that would represent its previous all-time high. I think there, yeah, previous all-time high. And again, if it can get above 240, we then have a target of 358. Now, one thing to say is I don't care too much for the product whatsoever, but the stock price is looking very, very interesting. We've had a recent breakout. It's one that, again, many of our clients are in. I don't have a position personally, but it's moving very, very well. Nvda, Nvidia, I think I do have an upper price target that I've been very consistent on for the last few months of 620. But again, we do have this pivot that we need to take out at 580. And again, we'll see how far Nvidia goes. But given that semiconductors are showing such incredible relative strength, since the semiconductors are now breaking out, if you look at the chart for SMH, again, very, very interesting area. Again, we're not overcomplicating it. The strong tend to get stronger, and when we have the massive outperformance and we're not buying the beaten down names that are going lower, you tend to find the stress levels reduce as well, because your account is going up rather than down, and getting into the whole dollar cost averaging, etc. Docusign, again, we found a very, very clear base here. I think we're bullish above 190. Again, we have an upper target here of 290 on Docusign. We do expect it to go and test these highs. This is a a product that I use personally. I really like the product, like the company. Don't have anything negative to say about it, and we expect it to get to 290. Square Inc, again, a recent breakout here above 174. For those of you that follow my social media, you'll know that I posted this chart above 172. We're up at 187, and again, upper price target here 260. Trade Desk, I had a few emails about this because in our last analysis we did provide a chart for Trade Desk. Now clearly the trend, the move that this has had has been utterly incredible. I first touched on this when price was way down here. We're going back to one of my analysis a month ago. I put out to social media, and the thing is absolutely ripped. Again, I think we're looking at a level here where I think the smart money might well start to take profits off the table. If you're technical in your approach, again, if you're in it for the long haul and you want to be in it for 20 years, you know, be in it for 20 years. But for me and my approach, I like to do, you know, set these levels here, and especially when we start to get into massively overbought conditions, it just helps us. And you know, there's nothing wrong with profit taking and buying the dip if you want to do that. But you know, for me, much happier profit taking and then just wait for the next breakout, or like I said, wait to see how far the price drops. Again, LRCX, touched on this one a few weeks ago on this support level. It's absolutely ripped. Again, upper price target here at 390. Roku, again, I get requested this one. I don't know why it's such a popular stock. I mean, when you talk about technology and what it does, etc., I mean, I'm not blown away by it on a personal level, but you know, the stock price is breaking out. Again, I touched on this one a few weeks ago above 177. It's moving very well. Ultimately, we would hope to see it reach 250 and hopefully beyond. AYX, again, we've had a breakout. It's moved, it's now gapped. I believe the revised guidance or something, I think one of my clients was mentioning to me, and you know, the path of least resistance is higher. I don't like to short stocks that are moving higher. I think it's a fool's game. Yes, there are some individuals that can do it very well, and you know, I'm not going to tell anybody how they should manage their capital, etc., because I understand that all styles are valid. But certainly AYX, path of least resistance is higher. Now that brings me on to the, we call it gambling. Had a breakout recently in DraftKings. Had a breakout, it's moved higher, and we've dipped. I think provided DraftKings is above 44, let's call it 44.50. I think it, provided DraftKings is above 44.50, I think it's a dip that can be bought. I wouldn't be looking to, you know, take any chances if we were to break back below this level. I think that would be a bit of a problem. But again, you know, from the breakout, it's moved really well. But I think you do need to be a little bit cautious with DraftKings. Obviously, Penn National Gaming, Dave Portnoy. I think we're building a bit of a base. I think a lot of questions I get tend to centre around, you know, well, Sam, you know, what's going on? The price isn't moving higher anymore. Sometimes price just needs to take a little bit of a breather, and it pays to understand the bigger picture here. When you apply really, you know, useful tools like a trailing stop loss, it can keep you in the trade for longer. You just need to know how to use it. And also, you just have to understand when a stock is starting to range and move into a sideways consolidation and potentially building another base. We'll look here, you know, that's a textbook base, broke out. Now it's moving sideways, looks like it's building another base. If it breaks out here, it's going to 9600 and beyond. So I think provided price is respecting these levels, I think you can continue to be bullish on Pen. That leads me on to solar. Now, if you've not been invested in solar over the last couple of months, there's maybe an issue possibly with your approach. I think most of us understand that solar has been a massive area of focus. It's been a huge area of focus for my own work, but in-phase energy has ripped higher. We're now starting to move into overbought conditions, and we've got an upper target here of 120 on ENPH. Will that be the limit for price? Probably not. But what we like to do, as I said before, is set these targets, and you can always buy back in again. I don't like to hold capital for longer than I deem to be necessary. Profit taking at these levels and then just reallocating somewhere else is my preferred approach. But again, don't tell anybody how to manage their money. Pinterest, again, beautiful uptrend here at the moment. We've got an upper target at 55, and I think it's building a bit of a bullish setup here. For any of you that understand flag patterns and triangles and pennants, etc., I would highly recommend the work of Bulkowski when we work through technical analysis in a professional sense. Although chart patterns are clearly very subjective, and a lot of them, in my opinion, are a lot of nonsense as well. There are some patterns that do hold a lot of merit, and they can result in high momentum moves. So I would highly encourage you to go and spend $50 on Bulkowski's encyclopedia. It's a great reference tool. Fastly looks like it's breaking out again. Not overcomplicating it. Uptrend, base, possible breakout here. Something that I have noticed here is this bar here, above average volume. Again, I like that very much. Nike looks like it's wanting to move higher. I think with retail breaking out, I think when you look at the chart for XRT, again, above 131, I think Nike might start to move. Tesla, I get asked about 100 times a week. I think above $500 would make a lot of sense there. And we also have TSM, again, for disclosure. This is one that was recommended to our clients in last weekend's market overview. And again, we've had a massive breakout. It's starting to move really well. And again, I think with the earnings coming up this week, it'll be really interesting to see what happens there. But we do have an upper price objective there around 160. Now, what I would say is with the upper price targets, that there's clearly a lot that has to happen for price to get there. It has to navigate earnings. It has to navigate all the nonsense with all the analyst upgrades and price target changes, etc. But what technical analysis allows us to do is just to manage our risk a little bit closer, and to identify good risk to reward propositions on stocks that are showing really good relative strength in the market. So hopefully you've got a bit of insight to how my work is and what I do. If you're somebody that struggles a little bit and you're not really sure about technical analysis, you can stick around for a couple of minutes here if you like. But if you did get some value from it, please do subscribe to our channel. Let me know your thoughts in the comments. It all helps. But if you're wondering who this strange man is with the Scottish accent, I run honeystocks.com charting service, and what we provide is exactly what you've watched. We provide a premium weekend analysis. We provide a halftime analysis on a Wednesday. We've got charting support. We provide trade ideas. We also provide access to our technical analysis program so that you can understand technical analysis, so you can understand how to apply the tools. And that's exactly what technical analysis is. It's not some magical indicator that's going to guarantee you profits. It's a tool that you can use to aid your investment process, and that's what our program helps you to do. It's just to build your own process. It's got exceptional feedback from our members and clients, and we also provide a trading community. But something that everybody has been calling for since day one. We're now 1 year into the membership. Our membership recently reached capacity. We've now opened up another 50 spots, but what I've done is I have now added a quarterly membership. It's something that many of you have been asking for because the outlay for an annual membership is too much. And I know that there's many of you that just want to learn technical analysis but don't necessarily want to certainly pay for a full annual membership. But the quarterly membership might suit those of you that are maybe looking to learn technical analysis and want a few months of support before you make any big commitments to an annual membership. So hopefully, those of you that have been, wanting that, you now have access at a cheaper rate, I guess. But just to kind of give you an idea again of what some of the charts look like with our service. Again, we're very, very unique. We publish all our trade ideas on our website. This is a recent alert that went out for Nvta. Again, I made a disclosure during the analysis. This was a recent alert that went out for VSLR, and that was a massive, massive winner. Plug Power, again, disclosure, was a recent alert that went out above 1450. Peloton, again, massive. Cldx, again, massive. But like I said, very, very unique. I wish this was the default for the industry that I work in, but I log every single trade alert that I have ever sent out to our clients. For 3 years I've done this, so you can have a look and see the date that I've recommended the stock, the name of the stock, the price that is recommended at, and how that stock has then gone on to perform. And hopefully what that does is demonstrate that I'm able to identify trends within the market, identify strength within the market, and naturally that's equated to a lot of happy members. But if you're looking to maybe get away from day trading, if you want to learn technical analysis, what we provide, it really just filters through thousands of stocks and finds the best ones. And if you want to be part of a little community as well, if you appreciate clean charting, it's all there for you. So feel free to go and check all that out on our website. But thank you very, very much for watching, and maybe we'll pick up with you very soon. Thanks.